What's up, you guys? It's Brett Wiederhold here, real estate agent with Royal LePage, Your Community Realty in Toronto, Ontario. In this week's video, we're going to talk about first-time home buyers and a guide to home ownership and some of the incentives that you may have and why you should be buying a home in Toronto or the surrounding area today. If you haven't yet, subscribe to my YouTube channel. It's down here in the corner. And follow me on Instagram, see what I'm up to on a daily basis and kind of, hit the grounds running with me. So without further ado, let's get started on the presentation here. By the way, I do this presentation in person, try to do it about quarterly. So if you want to come to one, by all means, send me a message and I'll let you know when the next one is as well. I thought maybe I could just do this as well for some people that may miss it all the time. So before we get in, my name is Brett Wiederhold again. I'm an agent with Royal LePage, Your Community Realty. I do have a degree, Bachelor of Science from Western University in kinesiology. And the reason I did kinesiology is because I had such a passion for wanting to help people. And so maybe I'm not in the same field that I went to school for anymore, but I have such a passion for helping people, and I think it shows in my real estate career as well. I volunteer with many organizations, one of them being 360 Kids from Richmond Hill, just north of Toronto and York region. Amazing organization, highly recommend checking them out. And they help house underprivileged youth as well as connect them with job opportunities, resume, and kind of updating skills. So it's a great organization. I first became passionate about real estate investing when I was at Western, and I worked at a private club. And so a lot of the people at the private club were doctors and professors, and some of them were in the real estate industry. And I noticed the majority of them ended up owning rental properties. So I ended up shadowing a couple of the people, one of the agents in London that was a member there as well, and just got hooked on it. And the reason I got hooked on it is because I saw the opportunity for passive income, that if you grow your rental portfolio or real estate portfolio, you can go travel and still know what you're getting paid every single month. So travel is a huge passion of mine, as well as when I'm older, I want to spend more time with my family, with my kids. So I think that if I start growing now, my real estate portfolio, it'll benefit me in the future. Huge sports fan, grew up playing a lot of hockey. The Leafs, unfortunately, just lost and aren't in the playoffs anymore. It's April 25th. But I'm super excited. The tennis season's coming up, and I'm super excited to hit the courts outside in Toronto as well. And finally, I'm always continuously learning, watching podcasts, watching YouTube videos. So if you need any recommendations on great books or great people to kind of follow, send me a message. I'd be happy to help you out. So without going more into me here, let's get right into the Toronto real estate market here. So why buy real estate? The first reason you should buy real estate is to build equity. So equity is the difference between the value and assets of the liabilities. So if you have a house that's worth $500,000 and you put $100,000 down payment on it, you'd owe $400,000 in most likely the form of a mortgage. So that means you have $100,000 in equity. What I like about owning real estate, though, is in your mortgage payment, you're paying principal and interest every single month. So if your payment was $2,000 a month for your mortgage, part of that goes to principal, and at the beginning, unfortunately, the majority of it goes to interest. But over time, you're paying your principal down month by month. So at the end of a year, 3 years, 5 years, that equity that's in that home isn't $100,000 anymore. It's higher because you've been putting into it. So it's almost like a forced savings. Second reason why you should buy real estate is for appreciation. So appreciation is the increase in value over time. So we've seen appreciation with real estate. If you have a very famous coin or something like that, or gold, it really comes down to supply and demand. So if there's or even gas appreciates over time as well. So if there's less gas being mined, then the price will go up because the demand usually stays the same. But if there's less of it, then you should charge more for it. So the same thing kind of happens with real estate. If there's, 10 houses in a subdivision, but 15 people want to live in that subdivision, the prices will go up. And vice versa. Let's say, this is all economics, by the way. So let's say a city is really dependent on a certain industry, such as GM in Oshawa, or where the Heinz ketchup factory was out by Windsor. If those big industries leave, then all those jobs and all those people that were working for those companies might have to leave as well if they find new work. So that might actually depreciate real estate. So what I like to do is find areas that appreciate maybe faster than others, but may appreciate in general. And key points to think of when you're looking for places that appreciate is transit, really, honestly. So highway expansion, transit expansion. Like, I think London, Ontario is going to appreciate like crazy, especially if that light rail train gets out there. We saw it with north of Newmarket, East Gwillimbury, Bradford area. Once the 404 started going up there, the prices started skyrocketing. So I'm always constantly looking outside the GTA or inside the GTA for areas that might appreciate faster. Finally, my favorite peer of buying real estate is cash flow. So cash flow is the amount of money that you're actually making off this property every single month. So you're making it as an investment. So it's pretty much a dividend. I put in my $100,000 worth, and maybe I'm making $200 a month in cash flow after all my expenses and mortgage payments. So examples of this could be an Airbnb, long-term rental, having a roommate to help subsidize your mortgage costs, duplex, house hacking, tons of examples that I'll go into later. So why should you buy in Toronto of all places? First one is appreciation. So this is one of the pillars of real estate. So Toronto's a Class A city. It's the fourth safest city in the world, and 55% of the population has a university degree. Tech growth in 2015, 2016 was about 22,000 jobs. So time and time again, Toronto is starting to grow on a more national scale. Condos are hot, as you can see here. So look at this growth, 18% growth and 19% growth. So if you bought a condo for $440,000 in 2016, in 2 years, it's roughly worth $100,000 more in just appreciation. Now, I don't always go straight off appreciation because these are insanely high numbers. We've had millennials that are trying to get into the condo market, as well as downsizers that are getting into the condo market. Plus, as I'm going to talk on in a second, a lot of immigration comes to Toronto as well. So with all those three factors and the price point that they're at, they've been increasing like insane numbers. So if you're a condo owner, I know this isn't a first-time owner now, but if you're a condo owner, this is a great time to sell your condo and move up to a detached, because now detached are getting a little bit more affordable in comparison. So as I mentioned before, immigration here. So back to supply and demand. How many people want houses, and how many people, or how many houses are there? So in the GTA, it's expected that it's going to grow about 6 to 9 million people, to 6 to 9 million people by 2031. And 1 million people are going to come in 2019 to 2021. So that's a lot of people coming to the city. And we can see, Toronto is a very diverse city. About 52% are born outside of Canada. So I was curious about this. I was curious in the past, because these are projected numbers, but we don't know how many units that we're able to build to house all these people. So I did a case study, and it was 1996 to 2011. 230,000 people came to Toronto proper, but only 144,000 units were built. So you can see there's a disparity between that. And I'm not saying, every single person needs a single house. Obviously, there's families and stuff like that. But if there's immigration from even within Canada, that supply and demand, that'll obviously increase the prices of houses in Toronto. So I'm sure we've all seen this before, and the old adage of don't wait to buy real estate and wait. By January 1995, houses are at, roughly $175,000. Look at this exponential growth, really, and this is the anomaly that we just had with 2016, 2017. But even if we skip that, we're still on an upward trend of appreciation. So if I saw this kind of graph in, a stock market, I'd be all over it. So not going to say much more. Now, what I think is super interesting about Toronto, and Torontonians, trust me, I know how expensive it is to live in the city. And this is a little outdated, but it still brings the whole message here. Let's say price per square foot's, $800 per square foot in Toronto. Let's have a look at any other Class A global city. Look at these outrageous prices. $3,000 a square foot in Hong Kong. $1,200 in Sydney, San Fran's $1,500. Like, Toronto's at $791. So if you're looking at this, and this is what I said, guys, I'm looking out for appreciation moments. So if you look on a global scale, this is why Vancouver and Toronto had those housing bubbles in 2016, 2017. Because look at these prices over here, and look at these prices. So it was a no-brainer to invest in Canada real estate or Canadian real estate because, you're getting your dollar goes way further, right? So this is what I'm saying. Toronto is a hub. Buy in Toronto because this can go nowhere but up. Toronto's, going to be home to Sidewalk Toronto, Google's new headquarters. Amazon had a big bid for new headquarters. We're really getting recognized on a tech spectrum, and we're growing like awesome numbers. So this, I hope, is a demonstration to that. Again, this is a little, older from 2014, but we're a global city, and you can see this is a graph here. Pardon me. So let's have a look at this here. This is from 2014. You can see that the average size of a resale condominium apartment is starting to decrease. So I find this very fascinating because as we build newer and newer units, we're building them smaller, which, let's say the units are most likely higher than what they were in 1996. So you're building more units, but they're smaller, so you can house more people, which I think is a testament to they're getting sold if they're getting built, right? The developers aren't going bankrupt here, not being able to sell them and build them, right? So more and more people are coming in, and we have to save our space. So let's have a look at monthly rent here. Again, a little bit outdated. I'd say a one bedroom's hovering around $1,800 for a condo right now. But look at this, $3,500 for a monthly rent in San Francisco. We still have a lot of ways to grow, even in the rental department. And so this is why I'm saying buy in Toronto. Because if you buy now at the prices they are, even though they're a little bit heightened due to those factors I said earlier, your rental prices are going to hopefully be able to increase because there's room to increase. Here, if I was buying in San Francisco, I'd be worried how much higher can it go, right? That's just the way I think. So let's talk about current numbers. So I'll give you a little bit of a scenario here. Let's say we're looking to buy a one-bedroom condo. So if you rent a one-bedroom condo, let's say over a period of 3 years, it's $2,100, bit average, bit above average, I said $1,800. You're spending $75,000 in rent over 3 years. If you were to own that exact same condo, put $100,000 down, which is the barrier to entry for all of you watching. I think the down payment is the barrier because these make sense. So if you have $100,000 for a 20% down payment, call me and let's buy you a condo. So you've got a $400,000 mortgage, 25-year amortization over those 3 years. So your mortgage is $1,900 a month, plus your maintenance fees, plus your taxes. So you're looking at an expense of $2,500 a month. A little bit higher than renting. So obviously your cash flow would have to be all right with your job as well. So we'd have to sit down and talk about your numbers. But For $400 a month or more, you can own your home. And what's the benefit of that? Why would you want that? And by the way, if you own a condo, there's barely any maintenance that needs to be done because they're all covered in this. So it's not like you're buying a home and you have to cut your grass and all that. It's pretty much the same as renting the one-bedroom condo. What I love about this, let's have a look. Principal paid, remember I said your mortgage payments is P plus I? Your principal paid would be $33,000 after those 3 years. So that $100,000 mortgage that you just put in is now $133,000. Let's say it appreciates by 5% in those 3 years. Again, remember we just said I think 8%, 10%. This is a very conservative number because I don't like to bank on appreciation. But just for fun, that $500,000 condo is now worth $579,000. So you gain $79,000 in appreciation, $33,000 in principal. In 3 years, you're up $112,000. Or you could rent and be down $75,000. Isn't that amazing? This is the magic of real estate. You only need $100,000 to do it, and you're gaining $112,000, and you're borrowing the $400,000, right? Like that's amazing. So I hope out of this entire presentation, if this is what you can take away from it, take away this: invest in real estate at a lower 5% return. You're still gaining a ton of equity, and even if it doesn't appreciate, you've got $33,000 of forced savings in that home. Okay, so I said the barrier to entry to this magic world of real estate is the down payment. $100,000 is a lot of money, especially considering a lot of people that went to university still have student debts, etc., etc. But at the beginning, I told you there's some benefits to being a first-time home buyer. And so one of the benefits is help with the down payment. So how much do you need for a down payment, first of all? Conventional mortgages are offered at 80%. So 20% of the purchase price would be your money. So again, if you're buying that $500,000 condo, your down payment would be $100,000. There is an option in Ontario to have a high ratio mortgage. So you could have less than 20% of the purchase price put down. So let's say you wanted to put 10 to 15% down, you'd only need $50,000 or $75,000. Again, you could even do 5, but this all depends on lenders, and there is a premium to pay. So you'll get this through your bank, but it'll be through CMHC or Genworth. So it's called mortgage insurance. And if you put 5, 10, 15% down, so less than the 20%, you have to go with mortgage insurance. So mortgage insurance will cover you if you don't make if you default on your payments, pretty much. It can be paid in a lump sum or monthly payments included in your mortgage payments. The thing that I want to point out here is that it's only for your principal residence, so you can't do it for a rental. And here's some resources I highly recommend you check out. I'm not a mortgage expert. If you have more questions, I'll connect you with a mortgage expert, and they'd be more than happy to help you with any questions you have here and even pre-approve you. So how do you get mortgage, or how do you get a down payment? Let's talk about some ideas here. So you can get a down payment from family. I've seen people have private loans from a family. You can set it up with a lawyer, how much interest you pay, when it has to be paid back, if it's just a gift. And some people are looking at it as an advanced inheritance. Some people may not have that option, which is totally fair. I've had clients that do, and I've had clients that don't. You can also get your down payment from your savings, obviously, so you're working for it, your investments, or if you sit down with a financial advisor, they can help plan and to help that money grow in an organized term. Again, if you want a connection to financial advisors, I'd be more than happy to connect you. Another way to get your down payment here is what's called the Ontario Home Buyers Plan. So if some of you have RRSPs, Registered Retirement Savings Plan, you're allowed to take $25,000 in one calendar year. It's only, again, for your principal residence. It's only for first-time buyers, and you have to repay it within 15 years, starting 2 years after your withdrawal. However, this is a great option if you want $25,000 extra on your down payment and to repay it within 15 years. They're giving you quite a bit of time to do so. So I mentioned mortgage pre-approval. What is a pre-approval? Why should I get pre-approved? Let's start here. So a pre-approval is the maximum amount a bank will loan you. So you go to the bank or a mortgage broker, and before you come to me going shopping, because we don't know how much a bank is going to give you. So it'll tell you what your monthly mortgage payment is, your mortgage rate for your first term. And the reason I highly recommend getting a pre-approval before you even contact me or before we go shopping is because it's free. It's non-committal, and it'll actually lock in a rate for a certain amount of days. So if interest rates are rising, then why not get a pre-approval, lock it in for 3 months, however long they want to lock it in for, and then if it rises, you're actually, in a great position now. You're paying less interest. Why I put it saves time and stress here is because I've been with clients that haven't had a pre-approval, and we've gone shopping and they fell in love with the property. And once we went to the bank to go get approved to, get financing for the property, the bank wouldn't give them the amount of money that they wanted or needed. So you have two options there. Go to a B lender for the remainder, which is higher interest most of the time, contact family for that remainder, etc., or walk away from the home that you've just been searching for. So I highly, highly recommend get a pre-approval. It's free, it's non-committal, and you'll know the budget that you're working with. So how do you get a pre-approval? You talk to a mortgage broker or a lender. They'll check your credit score, which is your financial health, and it determines the quality of the lender that you're working with, A or B lenders, and the interest rate. Your down payment will have a impact on the pre-approval and how much the bank's willing to give you. The higher the down payment, typically the more the bank would likely to give you. And then they look at how much you can afford versus how much you make every single month. And this is for all of your reference just some of the documents that you might need when you're getting pre-approved. This may or may not be everything that is required by your lender, but I just wanted to throw that up there for you. So another benefit to being a first-time home buyer here is some rebates. So in Ontario, you have to pay a land transfer tax every time you buy or sell a property. So how much is land transfer tax? It's all these percentages here. So if you bought that $500,000 condo, the Ontario land transfer tax would be $6,500. In Toronto, we have a lovely municipal land transfer tax worth $6,500 for that $500,000 home as well. So $13,000 would be in the land transfer tax. However, if you're a first-time home buyer, Ontario and Toronto gives you up to $8,500 in rebates, which leaves you with only $4,500 in taxes to pay. So eligibility, first-time home buyer, and you have to occupy your home within 9 months of purchase. No brainer, super helpful to everyone that's a first-time home buyer, and yeah, that's it, I guess. That's fantastic. So what do you buy as a first-time home buyer? I know I've been talking about one-bedroom condos, and typically that's what I find first-time buyers really go towards. However, here's just a couple ideas and the differences between the things that you can buy. So A, you can buy for personal or you can buy for investment purposes. However, remember some of those rebates were only for personal properties. So if you buy a condominium, A, you're going to have maintenance fees. Parking may or may not be included, and so you might have to buy a parking spot. You're going to get some amenities, which is kind of cool, like a pool or barbecues outside or tennis courts, squash courts, theaters, billiards rooms. Depends on the condo building, but you can have some fun there. You get the location of living right downtown or close to a subway. There's a lot of condominiums that are along subway and transit routes. And maybe a disadvantage or an advantage would be elevator living. So some people like it, some people aren't a huge fan of it, and usually the spaces are a lot smaller as well. If you like that view, that $1 million looking view, highly recommend elevator living. It's fantastic. Second option could be townhomes. So if people want more space or less neighbors, don't want to be living in that elevator type style home, I'd recommend a townhouse. Townhouses in Toronto could be pretty pricey or more expensive than a condominium because there is more space and typically not just a one-bedroom townhome. It's usually a little bit quieter. You can find some cute enclaves as well. And some townhomes actually do have some maintenance fees. So it's a townhome condominium. The maintenance fees would probably include things like maybe cutting the front grass or communal roofing, communal windows. So it doesn't, some of those bigger expenses of owning just a freehold townhome may be included in your maintenance fees. And with a townhome, you have less amenities sometimes as well. So that's something that you have to keep in mind. So if you're looking at investment purposes, pre-construction in Toronto is a great option. So you will need 20% down payment for pre-construction, but they do offer an extended deposit structure. Oops, sorry. But they do offer an extended deposit structure, which means in about usually 1 to 2 years, you can do deposits in 5% increments. So you don't have to have the whole 20% up front. Another advantage is that it takes a few years to build. I say advantage because if you're doing it for investment and you buy it at price A right now, but over 3 years, it might be at price B. So I think that's an advantage because you have no mortgage while it's being built. So you're not paying any payments over this time, yet your, let's say it was $500,000, yet your $100,000 investment, that 20%, could be growing in appreciation. So this is why I say buy strategically. Pre-construction is something that banks very heavily on appreciation. As I said with appreciation, it's kind of risky because of certain economic principles. People moving in, people moving out, businesses, all the economic factors. However, Toronto is that Class A city, so we have to remember that Toronto is a Class A city with high immigration, and it will most likely appreciate. Especially condos in the past, we've been seeing the appreciation, but always have to buy strategically, always have to buy at the right areas because it's never a guaranteed thing. Working with someone like myself, a realtor with VIP access, I can get you incentives to pre-construction builds. So that could mean discounted or free parking, free or discounted lockers, capped development fees. It could mean 1 year of free maintenance fees, etc., etc. So I can actually negotiate with the builder and try and get you some incentives as well. With pre-construction also, you are able to sell on assignment sometimes. So I can also get you a free or discounted assignment fee from the builder. What assignment fees are is, I said, remember, it takes about 3 years for that condo to be built. If 1 year before it's built, you don't want to hold on to it, don't want to rent it out or anything like that, you can take that contract and you can sell it to someone else. And remember, I said it's worth more after those couple years, most likely. So by not even doing anything and just having that 20% down payment, you're able to make money off selling a piece of paper. It's almost like flipping homes if you look at it that way. You buy a fixer-upper, you fix it, you make more money on the sale. You buy pre-construction, you wait, and then you make some money on the sale. So another way that you can invest is a duplex. Or a 2-bedroom condo, for example. So they're a little bit more expensive than your 1-bedroom or townhome, but it offers income potential. So why I said this as your first property is because it is eligible for CMHC, Canadian Mortgage and Housing Corporation, and the rebates because you're living there, because it is your personal residence. So what you could do is rent out that second room to a roommate and help with the rent. Obviously, if the bank's not going to lend you a lot of money for your because of a low down payment, that's something where you need to go find money from other people. I've also seen some people maybe buy a 2-bedroom with someone else because 2 incomes are always better than 1, and that way you both share the equity in the condo, both get the appreciation, and both share all of the expenses as well. With a duplex or even an older condominium, you can add renovations to it as well, and this allows sweat equity, as I like to call it, to be put into the property, which will most likely have it appreciate as well. And so that's the difference with some appreciation. There's passive appreciation, where you're hoping, like the pre-construction, that it'll just go up because of economic benefits, or you can put some active appreciation into it by doing some renovations. So just to top off this video here, I kind of alluded to it just a little bit right there. There's some creative ideas, or so-called house hacking, that you can do. So I mentioned it, joint venture, buy with friends, buy with your partner, buy with a family member, buy a 2-bedroom, share the expenses, share the benefits as well. Get yourself into the market. Your first home's not going to be your dream home. The hardest thing is getting into the game. And so if you need to do that, I think this is a great way to do so. Buy fixer-uppers, as I said, again, with the sweat equity, put some active appreciation into it. You can buy a home, obviously, further outside the city you go, the less expensive they are, and you can maybe cash flow a little bit. Contact me if you want to do something like that. If you're okay living outside the city a little bit, renting out rooms to individuals to help cover the costs, I know great areas that you'll actually be able to rent those rooms out. You can Airbnb your bedroom or your entire home when you're away on weekends as well. So this is a great way to help cover some of the costs. Benefits is that you get people touring, you can show them around Toronto and be an ambassador and have a great time meeting people from different cities. Disadvantages is that it takes a lot of work, and some condos may not allow Airbnbs as well. So keep that in mind if this is something that you want. I have a list of condos that are available for Airbnb, and it's not written into their declarations. So contact me if you have any questions about that. Buy in other areas others aren't. So if you go way up north, you can find a house for $100,000, probably rent it out and make some cash flow. It might appreciate by a little bit, and then you sell it, and then you move a little bit closer to the city. It's all about that stepping game. Just like in Monopoly, for example, you can buy tons of many of those less expensive properties and have a lot of them, and when that's more likely people land on your properties more. Or you can just spend all that money on Boardwalk. People miss it every single time, and then you have to mortgage it. At least that's my strategy in Monopoly, because I am not good at Monopoly, unfortunately, which is kind of ironic. And the last thing I want to say here is own where you rent and rent where you live. So this, again, won't cover some of those benefits of a first-time home buyer, like the land transfer or being able to do CMHC. But if you rent where you're living and then go buy a home for 20% down, you could have that home rented out. So if you don't want to live, let's say, in St. Catharines or Windsor or London, you could buy a house there, you could rent it out, and then you could still live in Toronto. You don't get a couple of those benefits, as I said, which you wouldn't if this is your second time buying a property anyways. However, you have to maintain it as well, so just keep that in mind. But prices are cheaper than in Toronto, and you can actually cash flow. So I highly recommend keeping that in mind as well. And if you want some ideas of what you could make in certain cities, let me know. I study St. Catharines, Oshawa, Barrie. I've been studying East Gwillimbury, London. Windsor is really good for cash flow right now. Kitchener-Waterloo is really good with the 3 schools right along University Avenue. Let me know. I'm more than happy to help in any way. That's it for this video, guys. I hope you found it helpful. I tried to make it kind of as quick as possible. This is a little bit of a speedier version than what I normally do in person. If you have any questions, leave them in the comments below. Follow me on YouTube. Subscribe to me on Instagram as well. And this is my contact information. Feel free to reach out at any time if you have any questions. Take care, everyone.